I want you to stop whatever you are doing right now and give me the next 30 minutes because what I am about to share with you is not a theory. It is not speculation. It is an absolute, undeniable mathematical certainty regarding the impending economic collapse. And you need to pay incredibly close attention because the survival of your entire life savings depends entirely on the actions you choose to take today. We are looking directly down the barrel of a catastrophic financial reckoning scheduled to hit with devastating force by 2026. And I need you to listen closely because the track record of the brilliant macro investor we are going to study today is absolutely undefeated in environments exactly like this one. When the greatest, most consistently profitable minds in all of global finance are quietly, desperately repositioning their billions of dollars to avoid the coming slaughter, you do not ignore it. You do not just cross your fingers, close your eyes, and hope for the best. You take immediate, decisive, defensive action. The incredibly dangerous reality of our current situation is that the deeply embedded vulnerabilities in our entire global economic system are rapidly reaching an irreversible breaking point, and the historically reckless behavior of out-of-touch politicians and completely unaccountable central banks has placed your irreplaceable life savings directly in the crosshairs of an absolute disaster. If you are a retiree or someone who is rapidly approaching your retirement years, the sheer urgency of this message simply cannot be overstated. You do not have the luxury of time to recover from a massive 40, 50, or even 60% drawdown in your investment portfolio. You cannot afford to let sudden, blind panic dictate your financial future when the reality of this disaster finally hits the mainstream evening news and the general public wakes up to the nightmare. The intense struggles you have faced throughout your entire career, the late nights, the sacrifices, and the crippling anxiety you have patiently endured to painstakingly build your wealth over decades, it is all completely valid, and your honest, nagging suspicion that something is fundamentally and deeply broken in the American economy is 100% mathematically correct. We are currently living through an unprecedented, highly experimental era of endless quantitative easing, massive systemic currency debasement, and sticky structural inflation that the average commission-hungry Wall Street advisor simply refuses to acknowledge because their lucrative fee structures depend entirely on keeping your hard-earned money blindly invested in the exact mainstream assets that are about to get ruthlessly crushed. The old financial playbook is completely dead and buried. The traditional 60-40 portfolio, once considered the gold standard of retirement planning, is now nothing more than a dangerous, outdated trap designed to funnel your wealth to the elite. What worked so beautifully for the last 40 years of uninterrupted economic expansion is going to be the exact, precise mechanism of your total financial destruction over the next turbulent decade. Do you really, truly believe that a fragile economy built precariously on top of $34 trillion of suffocating sovereign debt, sustained only by the relentless artificial money printing of the Federal Reserve, can just smoothly, magically transition into a new era without experiencing a spectacularly severe correction? It is a complete and utter illusion carefully manufactured by those in power. Wall Street desperately wants you to remain comfortably complacent. They want you sitting there quietly holding the bag, completely unaware of the impending danger, while the smart money quietly, methodically heads for the emergency exits. But today, right now, we are going to violently level the playing field. I am going to meticulously break down the exact step-by-step strategies that legendary, undefeated investors like Stanley Druckenmiller are using to aggressively protect their massive wealth right now. And I am going to show you exactly how to apply these exact same defensive principles to your own personal portfolio before the catastrophic 2026 crash wipes out the millions of unprepared everyday investors. Druckenmiller is not just another loudly screaming talking head on financial television. He is a historically visionary macro investor who has incredibly managed to average 30% annual returns for 3 entire decades, without suffering a single solitary losing year in his entire career. When a man possessing that kind of flawless, God-tier track record publicly steps forward and says that we are decisively entering a massive, unprecedented economic regime shift, you stop everything and you listen. His core macroeconomic thesis is brilliantly simple, yet utterly terrifying in its implications. We have finally reached the bitter, unavoidable end of a massive 40-year supercycle of steadily declining interest rates and peaceful disinflation. The golden era of virtually free, cheap money is permanently over. The comfortable era of endless government bailouts, completely devoid of any long-term consequences, is over. We are now violently entering a dark, volatile period of structural, deeply entrenched inflation, directly driven by rapid, aggressive deglobalization, massively shifting global demographics, incredibly chaotic and unpredictable tariff policies, and a terrifying sovereign debt crisis that is completely, undeniably spiraling out of the government's control. The federal government has completely cornered itself in a trap of its own making. They absolutely cannot raise taxes high enough to ever realistically pay off this mountainous debt without destroying the working class, and they absolutely cannot cut their bloated government spending without instantly triggering a massive system-collapsing economic recession. So their one and only remaining desperate option is to slowly, deliberately inflate the massive debt away. They will relentlessly print newly created fiat money until the actual real-world purchasing power of your hard-earned dollars is completely, thoroughly decimated. This is currency debasement in its purest, most insidious, and most totally destructive form. It is a massive, hidden, unlegislated tax on your lifetime of hard work, a silent, invisible thief that relentlessly robs you of your future purchasing power while you peacefully sleep at night. If you stubbornly leave your retirement money sitting idle in cash, or even worse, if you leave it locked up in dangerous long-term nominal bonds, you are voluntarily raising your hand and volunteering to be the primary victim of the largest, most aggressive, massive wealth transfer in the history of human civilization. But you absolutely do not have to be a helpless victim in this scenario. You possess the agency to actively protect yourself and your family. You can intelligently adjust and aggressively reposition your portfolio right now, today, to strictly ensure that your accumulated wealth not only survives, but actually thrives in the coming economic chaos. There are 3 highly specific, incredibly resilient safe havens, 3 completely distinct and specialized asset classes that the smart money is aggressively, quietly accumulating right now in massive volumes, and we are going to go through every single one of them in painstaking, granular detail so you know exactly what to do. The very first safe haven that you must immediately, urgently consider for your defensive portfolio is gold. And before you roll your eyes, click away and mistakenly think this is just another generic late-night gold commercial trying to sell you shiny coins. I desperately want you to deeply understand the actual fundamental macroeconomic mechanics of exactly why gold is absolutely fundamentally essential in this highly specific, highly dangerous macroeconomic environment. Gold is not an investment in the traditional Wall Street sense of the word. It does not magically produce a quarterly yield. It does not pay a reliable monthly dividend, and it does not have a CEO or a quarterly earnings report that can be manipulated by creative accounting. Gold is money. It is the ultimate, historically indestructible, universally recognized store of value that has successfully survived every single catastrophic currency collapse, every single devastating hyperinflationary spiral, and every single sovereign debt default in the entirety of recorded human history. When panicking governments inevitably engage in reckless, unprecedented quantitative easing and legally print trillions upon trillions of digital dollars completely out of thin air, they are directly mathematically diluting the intrinsic value of every single existing dollar sitting in your bank account. It is the most basic, fundamental law of supply and demand. If the total supply of circulating dollars goes up exponentially overnight, the actual purchasing value of each individual dollar must mathematically go down. Gold, on the other hand, absolutely cannot be printed by a desperate politician. It cannot be magically created by a panicked central bank pushing a button on a computer keyboard. It strictly requires massive, intensive amounts of physical capital, heavy machinery, diesel energy, and intense human labor to physically extract from the earth, which permanently gives it intrinsic, undeniable, unforgeable value. As the actual purchasing power of our fiat currency inevitably collapses under the crushing, insurmountable weight of astronomical government debt, gold acts as a perfect, flawless mirror, perfectly reflecting the exact, precise magnitude of that ongoing currency debasement. Elite macro investors like Druckenmiller and his peers are aggressively stacking gold right now. Not because they naively expect the underlying price of the physical metal to magically go up in a vacuum, but because they mathematically know with absolute certainty that the value of the fiat currency it is measured against is mathematically guaranteed to go down over the next decade. This is the exact critical difference between naive Wall Street amateurs who blindly look at outdated price-to-earnings ratios and desperately hope for a quick lucky flip, and the actual smart money that deeply understands the fundamental terrifying reality of systemic macroeconomic risk. Gold is your ultimate foundational defense, your absolute indestructible insurance policy against the boundless arrogance, hubris, and staggering incompetence of central planners in Washington. You absolutely do not need to foolishly put your entire retirement portfolio into gold, but having a meaningful strategic allocation, perhaps somewhere in the neighborhood of 10 to 15% of your total net worth, is a critical, absolutely essential rebalancing move that will immediately provide incredible stability and peace of mind when the broader equity markets finally begin to violently unravel and panic sets in. But holding gold alone is simply not enough to successfully navigate the extreme, multifaceted complexity of the 2026 crash. You also desperately need safe yield. You need reliable monthly income to pay your living expenses, and you need ironclad capital preservation, which logically brings us directly to the second highly critical safe haven: short duration bonds and Treasury inflation-protected securities, highly commonly known in the financial industry as TIPS. For multiple decades, innocent, trusting investors have been systematically taught by their advisors that long-term nominal bonds are the inherently safe, boring part of their retirement portfolio, the reliable, steady ballast that will mathematically protect them whenever the volatile stock market inevitably goes down. That widely accepted theory was absolutely true during the incredibly long 40-year disinflationary environment we just lived through. But in a new, volatile world characterized by structural, sticky inflation, long-term nominal bonds are absolute, unmitigated financial poison. They are mathematically guaranteed, highly efficient wealth destruction machines. I want you to think about this incredibly logically for just a second. If you naively go out and buy a 30-year Treasury bond today, yielding a measly 4%, and real, on-the-ground inflation is rapidly running at 6, 7, or even 8%, you are mathematically locking in a guaranteed, unrecoverable loss of your actual purchasing power for 3 entire decades. And if the Federal Reserve is forced to desperately raise interest rates even further to violently combat that resurging inflation, the actual principal value of those long-term bonds sitting in your portfolio will absolutely plummet like a stone. We literally saw exactly this terrifying scenario happen in real time in 2022, which was mathematically the single worst year for global bond returns in multiple centuries of recorded financial history. Yet, incredibly, shockingly, highly paid Wall Street advisors are still blindly, recklessly telling their trusting, vulnerable clients to buy long-term nominal bonds. It is nothing short of absolute criminal financial malpractice. The actual smart money has completely, totally abandoned the dangerous long end of the yield curve and moved incredibly aggressively into the total safety of short duration bonds and heavily into TIPS. Short duration bonds, specifically instruments like 3-month or 6-month United States Treasury bills, cleverly allow you to consistently capture a highly attractive risk-free yield with virtually zero actual interest rate risk. Because the duration of the loan is so incredibly short, your money is constantly, steadily rolling over every few weeks or months, completely allowing you to immediately reinvest your capital at newly higher rates if stubborn inflation continues to steadily push those yields up. By doing this, you are remaining highly liquid, incredibly agile, and totally protected from the massive, devastating capital losses that will absolutely decimate the portfolios of naive long-term bondholders. And then, crucially, there are TIPS. Treasury inflation-protected securities are a truly brilliant, vastly underutilized, highly specialized financial instrument specifically designed by the government for the exact highly inflationary environment we are currently entering. Unlike traditional dangerous nominal bonds, the actual underlying principal value of a TIPS bond actually automatically adjusts upward in direct tandem with measured inflation, as officially calculated by the Consumer Price Index. If sudden inflation violently spikes to 8% next year, your actual invested principal automatically increases by that exact 8%, and your subsequent interest payments, which are mathematically calculated on that newly higher adjusted principal amount, also automatically increase. It is a brilliantly built-in, fully government-guaranteed, ironclad hedge against the exact insidious currency debasement that is actively threatening to destroy your retirement lifestyle. By intelligently, methodically shifting your critical fixed income allocation away from dangerous, highly volatile, long-term nominal bonds and directly into ultra-safe, short-duration treasuries and heavily into TIPS, you are actively, aggressively insulating your hard-earned wealth from the ravages of inflation, while still reliably generating a safe, completely dependable return to fund your life. This is exactly how you play smart strategic defense in a volatile market. This is exactly how you intelligently outsmart the rigged financial system. But playing strong defense alone will not adequately grow your wealth over the long term, and you absolutely still need calculated, intelligent exposure to global equities to maintain your long-term purchasing power and outpace real inflation, which smoothly brings us to the third, most highly nuanced, and perhaps most important safe haven. High-quality companies possessing structural, undeniable pricing power operating exclusively in essential sectors, characterized by highly inelastic consumer demand. This is exactly where the average poorly informed retail investor gets completely, totally wiped out during a highly inflationary market crash, simply because they do not understand the massive critical difference between a generally good company and a truly exceptional company that can actually survive and thrive during high inflation. During the rapidly approaching 2026 crash, corporate profit margins across the board are going to be absolutely ruthlessly squeezed to the absolute breaking point. The fundamental cost of human labor is rapidly going up, the raw cost of industrial materials is going up, the global cost of energy is going up, and the foundational cost of borrowing capital is going up. If a business fundamentally cannot easily, seamlessly pass those massively increased operational costs directly onto their end customers, their profit margins will instantly collapse, their quarterly earnings will absolutely plummet, and their publicly traded stock price will be brutally decimated by Wall Street. This is exactly why you must urgently, aggressively reposition your entire equity portfolio far away from highly speculative, unproven growth stocks, wildly unprofitable technology companies, and completely unnecessary consumer discretionary brands that rely entirely on the existence of artificially cheap credit and excess, freely flowing disposable income. Instead, you must immediately, strategically move your precious money into elite, dominant companies that possess absolute, undeniable pricing power. Pricing power is truly the absolute holy grail of successful investing in a highly inflationary economic regime. It is the rare, incredible ability of a dominant business to steadily, consistently raise its prices on consumers without ever losing its core customer base to cheaper competitors. And the absolute only companies in the world that truly possess this level of structural pricing power are those highly specific businesses that provide absolutely essential, completely unavoidable goods and services characterized by what economists call inelastic demand. Inelastic demand simply clearly means that no matter what the broader macroeconomy is doing, no matter how terribly high consumer prices go, everyday people still absolutely have to buy the product to survive. Think deeply about critical sectors like essential healthcare, baseline energy production, basic consumer staples, municipal waste management, and highly vital, irreplaceable national infrastructure. Everyday people can easily choose to stop buying the newest luxury smartphones. They can quickly cancel their multiple unnecessary streaming video subscriptions, and they can painfully delay going on their expensive annual family vacation. But they absolutely cannot stop taking their daily life-saving heart medication. They absolutely cannot stop paying to heat their homes in the dead of winter. They absolutely cannot stop buying basic food and groceries to feed their families. And they absolutely cannot stop paying their monthly utility bills for clean running water. These highly essential, deeply entrenched businesses have the incredible structural ability to totally absorb the violent shock of sudden inflation and instantly, seamlessly pass those higher costs directly onto the captive consumer, completely protecting their vital profit margins and, by direct extension, completely protecting your invested capital. Furthermore, when analyzing these sectors, you desperately want to look exclusively for dominant companies within these vital industries that have absolute fortress balance sheets, incredibly low levels of corporate debt, and a long, unbroken, proud history of consistently growing their dividend payments year after year, decade after decade. In a new, highly volatile world where investment capital is suddenly incredibly expensive and actual, organic economic growth is incredibly scarce, a highly reliable, steadily growing corporate dividend is a bright, undeniable beacon of absolute financial safety. It reliably provides you with a steady, predictable, comforting stream of actual cash flow that can be strategically, patiently reinvested at significantly lower stock prices when the broader market inevitably crashes, incredibly allowing you to rapidly compound your wealth and increase your share counts even in the absolute darkest, most terrifying economic times. By intelligently, strictly focusing your portfolio exclusively on these elite companies with structural pricing power and highly inelastic demand, you are essentially methodically building an impenetrable, unassailable financial fortress completely around your equity portfolio, absolutely ensuring that your hard-earned capital is safely deployed in the absolute most defensive, incredibly resilient assets currently available anywhere in the modern global financial system. Now, I want to take a very serious, highly personal moment to pause and address you directly, man to man, especially if you are currently a retiree who has honorably spent the last 30 or 40 years of your life working tirelessly day in and day out to slowly, carefully build your retirement nest egg. I deeply, truly know that absolutely everything I have just shared with you over the last several minutes might feel incredibly overwhelming, dense, and scary. I intimately know that the mere terrifying thought of a catastrophic 2026 market crash brings up very real, completely valid feelings of intense fear, sudden panic, and deep, crippling anxiety. It is completely 100% natural and human to feel exactly that way right now. You are currently standing completely exposed at the absolute precipice of a massive historical economic shift, and the personal financial stakes for you and your family could not possibly be any higher than they are right this very second. If a young 25-year-old investor tragically loses half of their small portfolio in a sudden market crash, it is certainly unfortunate and it hurts. but it is absolutely not a life-ending disaster. They still have 40 long, productive years of future earning potential to slowly, patiently make all of that money back. They possess the incredible, forgiving luxury of abundant time. But you absolutely do not have that luxury anymore. Your carefully accumulated retirement funds are completely, totally irreplaceable. You cannot simply go back to work for another 20 grueling years to try and rebuild what a reckless, out-of-control central bank and a lazy, complacent Wall Street advisor carelessly lost on your behalf. The extreme unique vulnerabilities of being a vulnerable retiree in this highly toxic macroeconomic environment are incredibly profound and deeply concerning. You are currently facing the terrifying, unprecedented dual threat of a massive deflationary stock market crash that suddenly wipes out your core principal, immediately followed by a vicious, sticky inflationary spiral that slowly, methodically destroys whatever actual purchasing power you miraculously have left over. It is a completely terrifying nightmare prospect for anyone to face, but I desperately need you to hear me loud and clear right now, because there is hope. You absolutely do not have to be a helpless, passive casualty of this massive historical regime shift. You actually have the incredible power to completely protect yourself right now. You have the specific, actionable knowledge right here and right now, today, to aggressively take back control of your own financial destiny and immediately implement the exact same highly proven, fiercely defensive strategies that the absolute greatest, most successful macro investors in the entire world are heavily using right now. By intelligently, decisively moving your precious money out of highly dangerous, massively overvalued mainstream assets, and strategically repositioning it into physical gold as an ultimate currency debasement hedge, safely rolling into short-duration bonds and tips for absolute capital preservation and safe yield, and carefully buying high-quality elite companies with absolute, undeniable pricing power for long-term equity resilience. You are fundamentally, completely changing your entire risk profile for the better. You are actively, smartly moving from a terrifying position of extreme vulnerability to a powerful position of immense, unshakable financial strength. You are completely opting out of the rigged, dangerous Wall Street casino and smartly, quietly aligning yourself directly with the absolute smartest, most successful money on the planet. You are proactively taking the absolutely necessary critical steps to completely ensure that your entire lifetime of hard work, your countless personal sacrifices, and your beautiful, well-deserved dreams for a safe, secure, and happy retirement are not suddenly, brutally stolen from you by a corrupt financial system that is fundamentally, inherently rigged against the average, everyday retail investor. This is your critical, defining moment to act decisively. The devastating 2026 crash is absolutely not a mere remote possibility. It is a cold, hard, undeniable mathematical inevitability born directly from multiple decades of totally unsustainable, reckless government debt and criminally reckless, highly experimental monetary policy. Do not foolishly wait for the clueless, lagging mainstream media to finally, suddenly tell you that it is time to panic. Do not passively wait for your expensive, underperforming financial advisor to finally, reluctantly admit that their outdated, broken 60-40 model has completely failed you. Be highly proactive, be fiercely defensive, be absolutely brilliant and completely ruthless in your financial execution. Protect your irreplaceable wealth today, right now, so that you can actually enjoy the incredible peace of mind and the beautiful, stress-free retirement that you so richly, truly deserve tomorrow. If this video helped you see the situation more clearly, please hit that subscribe button right now. Your engagement is what allows me to keep bringing you the unfiltered truth about our economy, completely free from Wall Street bias. I want to build a community of smart, resilient investors who are prepared for whatever comes next, and I want you to be a part of it. Which of these 3 safe havens are you already in? Drop your thoughts below.